welcome to today's fast video, which is called FOMC breakout. S&P 500 left its tight range, and I was so clear to clients, whether swing or intraday, which way it's going to happen, and both had been navigating the daily moves, intraday moves to the letter. Such was the Wednesday pre-market chart, hourly one, S&P 500, midpoint. However, the signs were clearly skewing one way. You must have seen this tweet of mine laying out the case, and make sure to review yesterday's video, which had presented those clues precisely. Missing piece of the puzzle was US dollar stabilizing and trying to go back above 100, maybe even overcoming 101 later down the road. Thus far, it remains to be seen, and maybe, just maybe, some kind of a standoff resolution with China is being worked on behind the scenes, and no, I do not count if that major country trade deal framework to be announced is UK to just be a game changer. No, really, it is not. It is just that. But we had seen an encouraging move in the US dollar, which had been kind of a precondition for the stock market move that we saw unfolding, and another clue that I was watching with respect to German internal politics and how it goes when it comes to euro and attractivity of US America continent versus the old continent. We are seeing quite a move pre-market in the European session as well when it comes to German equities, and it's the one that bulls want to see, where we are again seeing a challenge to non-farm payrolls high equivalent as seen on the S&P 500 intraday chart as well. I'm featuring that in this video as well. Thank you for liking these videos and subscribing to the channel. Thank you for liking and sharing. Such is the hourly chart, where we are grinding, attempting to take out. Make sure to know that it would not be such an easy ride back above non-farm payrolls highs, which were the result of a squeeze, as the expectations have been really very negative, even including negative figures when it comes to non-farm payrolls. So let's drop a few words about FOMC. Powell did precisely nothing, apart from highlighting uncertainties when it comes to inflation outlook and the job market. Correctly so, but it was not a stag or inflation admission in no way. However, just highlighting uncertainty, some tariff mentions. We all know how the situation on the West Coast when with shipments from China is looking at, and what that means for prices going forward. But the positive interpretation, and it's behind us, and there was no fumble a la December FOMC prevailed, and that was exactly what I had been expecting to occur in the FOMC aftermath, and we did see that precisely. The sectoral view is very nicely reflecting that, and following the heavy dial back in the healthcare positioning, we saw some inflows, but that is no admission of a risk of trade raising its head. Tech and discretionaries with financials are all the ingredients that I wanted to see forget about communications where, say, Disney beat stands one way, Netflix and antitrust for Google, meaning Netflix tariffs on movies are not made in America are one thing and Google antitrust is another, so this is influencing communications results, so pay no attention to that. The picture sectorally is risk on following yesterday, and that's what clients who had been benefiting from the combo of intraday and daily analytics had been benefiting most. Positioning at the close, very nice, and we all know what has occurred in the semiconductor space with the international curves being questioned, dialed back. So that is what's responsible for this semiconductors boost. Remember how I was doubting the bearish positioning for clients yesterday, comparing it to pre-non-farm payrolls caution? Exactly that unfolded. Exactly that. Make sure to join the appropriate service based on what and how you trade, including the packages.